So, good morning, everyone. You're very welcome to the very first episode of Coffee with Cosimo. And the first one we're covering today is what is blockchain. But I wanted to tell you how we got here today. A few weeks ago, I was having a conversation with one of Cosimo's longtime supporters and investors, going back 10 years, actually. And he was asking me to update him on, what's going on in the crypto market, what are digital assets, what's happening, and all about Bitcoin ETFs and what they mean. And so I started off on a monologue for about 2 minutes, and he stopped me and he said, Ciarán, I didn't understand a word you said for the last 2 minutes. And I stopped and I smiled, and he said, he said that 95% of the population are like me. And he said, we don't understand what this all means. It's all new to us. And he said, you guys should do an educational webinar and try and break it down and simplify it for the majority of the market. And it was a great point. So shout out to John Snyder this morning. Thanks for putting this great idea in our heads. And now it's come to fruition today. So over the next few weeks, you're going to hear about topics like staking, smart contracts, tokenization, Bitcoin halving, NFTs, and stablecoin. I'm Ciarán Hynes. I'm one of the co-founders and managing directors at COSIMO Ventures, and I'm joined this morning from Florida, from Fort Lauderdale, by my partner Rob Frasca. Good morning, Rob.
Hey, good morning. Good morning. It's great to be here.
Yeah, why don't we just jump straight in, Rob, with the simplest question of all? I mean, what is blockchain and how does it work?
I get this question a lot, and I've been answering this question a lot. So hopefully my examples, if you will be able to describe this. When I want to go all the way back. COSIMO Ventures was actually named after Cosimo Medici. We did that very much on purpose because, as you know, or maybe you don't know, but back in the 1400s, the Medicis essentially invented banking. They invented the concept of the general ledger, and really because of that, the Renaissance happened. And when you think about how banks work today, basically what they do is they hold a ledger. And the ledger says, here are the debits and here are the credits. And all of society today is based on trust and institutions of trust. So, Ciarán, if I don't know you and you don't know me, and I want to give you $10 and you want to give me a Pokemon card, a digital Pokemon card for $10, what do? Well, we use a bank. We use a trusted intermediary that basically what they do is they clear the trade, right? They say, did Rob give Ciarán $10? And does he no longer have it? That's important because if it's digital, I might be able to give you, Ciarán, $10 and then maybe keep it and give it to somebody else and double spend it, which is called the double spend problem. And then the bank needs to say, well, did Ciarán give him the digital Pokemon card? And once the bank sees that happen, what do? They basically clear the trade and they write it into their database. And their database is the only copy of the ledger. And that's how our society works and has worked forever. Now, all of a sudden, this thing called the internet comes out. And it's a networked world. All of a sudden, everybody is connected. We've got it in our pocket. We've got it on our phone. We have it on our desktop. We have it in our car. Everybody is connected. And what did we do? Well, we took our banks, we took our central institutions of trust, and we put them on the internet. Makes sense, right? I want to do banking online. The problem is that when I take this centralized ledger, this database, and I put it on the internet, what happens? It's a honeypot. It attracts all kinds of, hackers and people who want to go in and change that database and ultimately take the cash or, essentially do some nefarious things. So now we're answering what blockchain is, right? So along comes Satoshi Nakamoto, okay, who is the inventor of Bitcoin, and which is based on blockchain, and they launches this thing called Bitcoin. Now, this is a profound piece of technology because what it does is it says, wait a minute, the problem is this central the central bank, this central point of failure. And if I put a central point of failure on a networked world, it becomes non-resilient, right? So now what happens if instead what we do is we give everybody on the network a copy of the ledger. And we make sure that everybody's copy is, is equal. Okay, so we make sure that it's synced up. And then what we do is we say, we're going to make this ledger you can only read to it and you can only write to it, but you can't erase it, you can't delete it, and you can't edit it. You just read and write. And then what you do is you say, I'm going to write my blocks sequentially over time so that you can't change history. Okay. So now we have this ledger that's in everybody's pocket, and it's a chain of blocks, blockchain, that's you're able to write to and that people can read to. So now, how does this clearing of the trade happen? Because now we have this new ledger, right? It's a decentralized ledger. Everybody's got a copy of the ledger. So how do we trade it? How do we clear a trade? So it goes like this. I announce, so everybody on this call, right? We've got what, 50 people on this call. So everybody on this call has a copy of the ledger. And I announce to everybody on this call, hey, I'm giving Ciarán $10. And Ciarán announces to everybody on the call, hey, I'm giving Rob a digital Pokemon card. And we do the trade. Now we ask everybody on the call, because they have a copy of the ledger, they have a copy of that transaction, they see the transaction. We say, hey, did that happen? And 50% of the people on this call on the network say, yeah, it happened. And oh, by the way, Ciarán no longer has the digital Pokemon card. He gave it to Rob. And Rob no longer has the $10. He gave it to Ciarán. And so we ask everybody to have consensus. Raise your hand. Okay. And once they raise the hand, oops, my video went away here. Once they raise the hand, sorry, I'm a little darker here, switching cameras. Essentially, we validate that transaction. We clear that transaction. And then what we do is we ask one person, one of those people, to actually write the block on the blockchain. So that's what's going on here. What's going on here is now we have an entirely new way to settle a transaction. And that is profound. That is completely profound, because if you think about it, now this is important because a lot of people say, well, can't you just change the code? Okay. Well, if you think about all the people are running the same code, if one person changes the code, it's not going to sync up with everybody else. And so you're immediately going to know, okay, wait a minute, that guy's trying to cheat the system. And so there's so much power that's held in this notion of consensus and network.
Yeah, absolutely. That's one of the things we hear all the time. The other thing we hear all the time is confusion between Bitcoin and blockchain. And those two words are used by people who are not familiar with this whole industry interchangeably. What would you say about that?
Well, Bitcoin is so let's go back to I think a lot of people don't understand what crypto is. Okay. So remember when I told you about the business model with the bank, right? So the business model with the bank is pretty simple. If I don't know you, you don't know me, the bank is in the middle, the bank takes a piece of the trade. They take a cut, right? That's the business model. The broker gets paid, right? If I'm selling a house, the broker gets paid. That's the business model, pretty simple. Now, we just moved to this network model where everybody's on the network, okay? And how do we pay everybody on the network? Because now everybody's clearing the trade. We have to pay somebody on the network, right? So what these networks have is a token of value, basically a way of charging a transaction fee and distributing that transaction fee to everybody who performs the security of the network. Okay. And so, so that's where Bitcoin comes in. That's where the crypto comes in. Okay. We just switched cameras here. So, that's where crypto comes in. So when people think of Bitcoin, what Bitcoin really is the token of value in that network for actually clearing the trade.
Yeah, the way I always explain it to people is it's the first successful implementation of a blockchain.
That's right.
And
It basically proved that blockchain works,
exactly.
right? I mean, it basically proved that, right?
Yeah. So you're an internet pioneer and now a blockchain pioneer, I suppose. We all are. We're involved in the space since 2017, which makes us dinosaurs. But what parallels do you see between the dawning of internet adoption and the mass adoption we're now seeing in the whole blockchain digital asset space?
Yeah. So look, most people don't understand the architecture of the internet, and what I see, this is playing out just like the internet did, just like mobile did, where essentially what you see is a lot of excitement about a new technology, a lot of investment in that new technology, a lot of nefarious kind of crazy activity in that new technology, and then what winds up happening is that we kind of get over exuberant on the tech, it devalues, and then the system is cleaned up with regulation. And typically what happens is larger, institutions, existing players enter the market. They usually buy up a lot of the undervalued assets, and then things, take off. And I see that playing out the same way here. Now, it's important, right? The internet is based on protocols. So there's a network, and then there's the operating system of that network, which is called those are protocols. So the first one was TCP/IP, okay, which is basically Internet Protocol. And then the next one that came out was FTP, File Transfer Protocol. And then the next one was HTTP, which was Hypertext Transfer Protocol. And then RCS for video gaming and real-time transfer. And then over time, what we've done is we've layered in all these protocols on an existing network to do new things. What's going on here with blockchain is exactly the same thing. Each one of these new technologies are essentially new protocols on an existing network to perform new types of tasks. And so this is the dawn of what I would say fully decentralized network-based, okay, transaction clearing versus bank-based, central-based transaction clearing.
Yeah.
And that's huge.
Yeah, you touched on some of this earlier as well, but another question we often get is there are so many blockchains out there. There's Avalanche and Cardano and all of these layer ones. And people are always saying to us, who's going to be the one winner? The way the internet won, who's going to win?
Right.
So, I know you touched on why earlier, but maybe just explain that a little bit more as to why there doesn't have to be one winner.
There doesn't have to be one winner because these protocols are designed for different use cases. So you might have one use case, which is just low velocity, high value, high security, privacy transactions. So you might have a protocol that does that. You might have another protocol that is aimed at super high velocity, Visa, MasterCard type of velocity. Okay. So there's a protocol for that. You might have a protocol that's really about media streaming and doing a time-based, okay, clearing of a transaction. There's a protocol for that. So, it is early, and there's new protocols entering every day, and there are protocols that have traction today. And those are, they're continuing to grow, but there'll be new ones entering the scene. And they all have different use cases. And in some cases, there might be a few that are competing for one use case. And you'll see, that play out over time.
Yeah, just like the internet, absolutely.
That's right.
So we're almost out of time. Just one topic of the moment, I suppose, just to give our opinion on would be the current Bitcoin ETF rage. What are they? Explain them for people, and what is their impact been, and what is it going to be?
Yeah, I think that the Bitcoin ETF is a seminal moment in time where what it indicates is the institutions have now decided and are comfortable with the risk, okay, of entering this market. And so when Larry Fink and BlackRock last summer filed for an ETF, an exchange traded fund in Bitcoin, it sent shockwaves through the system. This is the largest asset manager in the world. And following him, another 16 players came in, Fidelity, all the top players. When you add up the assets under management of that group of people that filed for a Bitcoin only ETF, it's about $20 trillion. The US GDP is what, 22, Ciarán? So this is institutional class. And incidentally, NASDAQ is doing the market surveillance on that. On January 10th, that was approved by the SEC. Now, what's happened since that approval? These are the fastest growing ETFs in the history, the 35, 40-year history of ETFs. You can't, every day I look, you can't keep up with it. I think BlackRock's already over 15 billion brought in. Fidelity's already 10 billion. I think the market is well over 70, maybe 80 billion at this point. I mean, I haven't checked in a day. So the money is flooding in to Bitcoin as a proxy for this space. And so what it does is it's early, but what it is a real proxy for a change in that kind of timeline that I talked about. Crypto up until now has been primarily retail driven, and now you've got the biggest players in the world jumping in. Now, what's next? We're going to talk about that, right?
Yeah.
Proof of stake and those kinds of things. And you look, right? What did BlackRock do? They filed for a spot Ethereum ETF.
Yeah.
They filed for it. It's not been approved.
Absolutely. So we'll wrap it up there for today. Thank you everyone for joining us. As promised, we're keeping these weekly podcasts or live webinars to 15 minutes. We'll be covering some other topical items next week. And if you want to register or spread the word, you'll see us on LinkedIn and on Twitter. And once you've signed up for one of these, you'll be able to always go back and look at the library of recordings. We'll make that available to all registrants. So thanks again for joining, and look forward to seeing you all again next week.